We're monitoring oil prices this morning after Iran downplayed Israel's attack on the country. To break down the moves that we've seen in commodities, we've got Scott Bauer, Prosper Trading Academy CEO, here with us. Scott, great to see you. Just want to get your reaction to what we're hearing out of the region and the impact that you're seeing on oil prices.
Sure. Obviously, with what happened last night, really emphasizes how much geopolitical risk is priced in to the price of crude right now, whether it's $5 a barrel, whether it's $10 a barrel. You can see how volatile that is. And when you break that down, if we lived in a perfect world and there was none of this risk, where would oil be trading right now? I don't know that exact number, but what I do know is that globally, economic numbers are really not so bad. So, where we haven't had a supply issue at all, really for the last, months or so, the demand side of things is picking up. That to me is really what is, keeping the pedal down on the price of gas and the price of a barrel of oil. Yes, the geopolitical risk is there, but I don't see a big pullback anytime soon here unless we really start to see a deterioration globally, economically. And we're certainly not seeing it here in the U.S.
So, Scott, if we do see any sort of escalation from what is happening right now, what has played out right now, if there is any sort of retaliation here from Iran, it doesn't appear that is likely. But if that is the scenario, what could that potentially then do to the price of crude? Is that what it ultimately is going to take to trigger a bigger move to the upside?
So a couple things. First, the real risk of this is that the Strait of Hormuz closes down or consolidates to the point where we can't get crude through there, because 20% of the world's supply passes through there. So that is the big risk. It's not a risk of that Iran is not going to supply anything or oil is not going to still be pumped. It's the delivery. So that's number one. Number two, where do we go from here? I know people are pegging $100. I think that's just an easy number because it's a psychological number. And what we have to keep in mind is when the start of the conflict between Russia and Ukraine began, we saw oil prices spike all the way to 125. I don't see that happening, but the upside concern here, the potential, maybe as small of a percentage as it might be, the potential for this to escalate into something globally, that can't be taken out of the equation.
Scott, it's interesting, and I've been tracking your Twitter or X posts for some time now, and we were talking about how wild of a week it's been. You put some numbers on this with the VIX hitting 19.56, highest intraday level since October 31st of last year. When you think about what's going into that volatility right now, that fear gauge index, is this the market looking at the international conflict and saying we can't take off the table that this isn't contained, or is it more of the thought process around the Fed speak that we've heard over the course of this week as well, and even kicking the can on any type of rate cut?
Yeah, I think it is more eco data and the Fed as opposed to the geopolitical risk, why we're seeing, elevated VIX. But, we have to remember with everything that it has been thrown at the market over the last few months or so, Fed, strong economic data, and the geopolitical risk, we're still sitting, only 4% or so off of the highs. To me, that's a win for the market, but that doesn't mean that we can't go lower. I'm not suggesting that's going to happen, but there are still so many headwinds out there, any of which, individually could really put a damper on this market. And I think in the upcoming weeks, when we get reports out of Microsoft and Apple and Alphabet and the rest of the big guys, and we obviously saw Netflix last night, that is going to have a big effect on psychology. And if the market can remain at these levels while we're seeing the 10-year at 450 plus and approaching 5%, while the Fed has changed course and gone from 3 rate cuts to maybe no rate cuts and potentially even a rate hike this year.
Scott, real quick, let's take a look at the price of gold, because I also think that's worth pointing out here when we're talking about this flight to safety. It might be a bit surprising out there to investors to see gold actually under pressure here today. What does that tell you? Are we seeing some maybe short-term exhaustion within the gold market?
I don't know. I still think there's a lot of tailwinds to the gold market. We did see the initial reaction of that, classic flight to safety happen last night. Gold rallied over 1%. We saw the dollar rally. We even saw the yen rally. So all those classic flight to safety, areas, those did get impacted last night. And, then as soon as we got news, or, the market is saying, okay, this isn't as bad as what we had initially thought, we are seeing a little bit of a pullback here. But I certainly think that, the trend and the upside to gold is still there, especially while there's everything going on in the Middle East and the potential for this to unfortunately, rise in a little bit, whether it's this week, next week, in a month from now, that risk is still there.
All right, Scott, always great to get your insight. Thanks so much for hopping on with us this morning. We really appreciate it.